So let's talk about structuring the deal, because this is a point where I think most people get it wrong. They try to structure this like it's a traditional investment. They pitch it as, hey, you're going to make a whole bunch of money in my company that's never sold a product, never made a product, never brought in a customer, never actually made a dollar. That's the wrong way to view it. From our perspective, the value for crowdfunding is that, again, it's sort of a marketing play, and what you want to do from that perspective is get the whole investment side, the ROI side, out of the equation. You want to make this attractive to people. You want to give them an irresistible offer. You want to make them want to be involved even if they lost every penny that they're investing. And the way you do that, or ways that you can do that, are by structuring the deal so that there are benefits that they get, either tangible or intangible benefits, that move the conversation away from how am I going to make money with this. Because look, frankly, if people are investing directly in the company, the ways they can make money are very limited and very risky and very rare. So you want to make it attractive regardless of that. Do you want us to talk about what we put together?
So one of the things that we did was we put together a collection of discounts because we know that our customers, once they wear one of our shoes, they tend to want to wear more of them. And because we're growing so quickly, moving from sandals to closed shoes to boots and other things, we've got a lot of new products coming down the pike. And so we wanted to, we figured there was a lot of opportunity for customers to be able to get early access to those products. One of the things we struggled with as a company is not being able to bring in as much product as we can sell. So by giving our investors early access to product, and by giving them consistent discounts so that they know, that they can always get a great deal on those products, those are things that are really attractive to our existing customer base. And
it just hit me that we graduated the discounts, so higher investment levels get higher discounts that last longer. So for example, a 25% off coupon every quarter for 2 years for a very small investment level, where in fact the value of that could be more than the amount that they invested. In fact, now that I think of it, it definitely is. And then up to 50% for 3 years, and then 50% for as long as we exist and they exist. We also threw in a bunch of other bonuses, some of which are, I started laughing as soon as you started talking about this because we're thinking about the same one, but I won't talk about that one yet. We are giving people, we have a thing we call the Rocks Mat. It's a foot massage thing. It's really fun. It's a nice little thing to give away. It's something that we just enjoy, and it's inexpensive for us to do. So it's a nice value add, where the value is much higher, frankly, than the cost. The second thing, we're not sending out stock certificates, but we wanted to have people promote us in other ways, so we're sending them a T-shirt. But this T-shirt is a stock certificate. So it's our logo. It's actually going to be this logo with a certificate written into the logo, and that's going to be the shirt. So that's another fun one. But the real fun that we're thinking about starts, I think, at the $5,000 level.
1,000 or 5,000, I'm not sure.
One of those. This is a very special product that you're not going to find everywhere else. And if anyone steals this idea, we will be very happy. Actually, it's a good one. It's a personalized bobblehead doll of the two of us.
Autographed Stephen and Lena bobblehead dolls.
Stephen
very
rare.
Dolls. Unlike, likely to be highly valuable in the future.
If we buy these, if they cost us like $20 each, you'll be able to sell these on eBay for like $21. I mean, it's going to be amazing. Actually, one other thing that's in the graduated bonuses, this is an interesting part for us. Up into the $5,000 level, when people are buying equity, they're getting non-voting stock. And at the $5,000 level and above, they're getting voting stock. So for some people who are investing larger amounts, they don't really care about the bonuses so much, although we had a number of people who are investing at that level say they can't wait to get the bobblehead doll.
But I also just want to make a distinction, because when Stephen's talking about voting stock, he's talking about stock with voting rights in the company. But one of the things that we're doing for all investors is we are going to be including everyone very actively in our design and production process, so that as we're trying to decide, because making shoes, you always have to decide, well, am I going to do this one or this one, and what colors, because everybody's got an opinion about what they want. And so we're going to be polling our investors to help us make those decisions about what directions we want to go with our products.
Well, and also we have a philanthropic piece of our business as well, and the investors are going to be able to participate in that, either by helping us decide who's getting some of our charitable contributions, or even bringing people to the table. So there's a lot of things that we threw into the mix. Again, some of them tangible, some of them intangible, that we think make the deal more interesting than just like, hey, how am I going to make a bunch of money?